Go live in YouTube. How's everyone doing? Good morning, Joel. Nice to see you. A lot of great conversations this morning, guys. Just a heads up, John Novak will be here at the end of classroom to answer questions. Don't worry about it. I know there's a lot of questions. I know there's a lot of new things. Um, Towards the end of class, we're going to go through and we're going to talk about some of them. He's going to come in, answer a lot of the questions that you have. Um, No YouTube sound, but I am 5 by 5. Well, YouTube's not live yet, Gary. We don't publish YouTube or go live on YouTube until after the classroom is over. What happens is spam bots absolutely rifle through the comments. Oh, well, I don't know what that is then. Not sure about that one. I would close it and reopen, maybe. That's my answer for everything. Unplug it and plug it back in. Welcome to the room, guys. Good to see you. Good to have you here. Excited for the day. Let's talk about news. Um, right on, Gary. Today is Tuesday, May 6th, and there is no high impact news today, guys. Nothing that can upset our patterns. What a great thing. So we're just going to kind of skirt right by it. And awesome, Andy. I like that. Start going through it, playing with it. It takes a couple days to get comfortable on something new, but man, I'll tell you what, not only is it good on its own, but when you couple it with what you have for Nexgen, oh my gosh. So don't try to rethink about it. Don't try and rethink it, Andy. Don't try to reinvent the wheel. Remember, what you have, you already have a solid plan. Now you're just kind of supplementing. So, guys, everything that I talk about is coming from the Nexgen page, 100%. The education page has all the answers, guys. All of the rules that I'm about to talk about are here. All of the looks, all of the trades. But we always start with one trade. We start with what we call a high probability trend trade. All right, John. That's third hour. He's excited. John slept last night. He's excited to go. I love it. Guys, we're going to talk about what's called a high probability trend trade today. This is our first hour, pretty much every hour, because the very basic lessons, guys, the core of what we're doing here is going to be the foundation for everything that you do with this software, I think. A high probability trade is defined, hey, good morning, Tucky. It's defined as when each indicator on every chart agrees with the rules for the trade, guys. This is the best of the best. This is the strongest triggers, no termination conditions, just all good. And that's what we're going to do. We're going to focus on this trade because this is a trade that typically wins 70 to 80% of the time when you follow the rules. This is a trade that creates confidence. Sorry, Paul, I kicked him out. So John has been working for the last year and a half on building a browser version. That's not quite done. And building a funding company. And TradingView is a facet of the funding company because his relationship with Ant Futures is going to open the door. TradingView has 50 million users. So it made sense for John to make Nexgen as accessible to TradingView users as possible. So this is kind of his baby coming to fruition right now. We're going to follow this high probability trend trade, guys, because this is the one that teaches you to read your indicators. And that's what we do every day. We're chart readers first before we're ever day traders, because chart reading is what lets us know that the rules are met. And rules are nothing more than a pattern that has been proven to win more than it loses. It's a pattern that is testable, that is repeatable, that you can validate and verify and believe wholeheartedly that that is your trade. And that's what the high probability trend trade is. And it, by learning to read your indicators, by teaching yourself to wait for advantages, you have the realization that day trading is 90% of your day just reading indicators. 90% of your day is doing nothing. 90% of your day is sitting on your hands 90% of your day is not being active in the market. About 10% of your day is, maybe 5. Because entering a trade should mean that you have an advantage. Entering a trade should mean that you have an edge, that it's proven, that you know that if you take it 100 times, when the chips fall, you're going to win more than you lose. That's why you enter the market. And that's why we focus so heavily on chart reading first, because it allows you to see those advantages that put you in that 10%. And you begin to recognize things when you focus on reading rather than trading. You begin to understand where the market is likely to continue. Initially, this is your entries for the highest probability trend trades. And then you begin to understand where the market is likely to go, and this helps you build a management plan that makes sense, that has you taking exits right at key areas. And very often those key areas are areas that could stop the market. You'll understand where the market is likely to stop. And this is what we call a termination condition, guys. And these termination conditions you will see in the distance. You'll know that you're coming up on them, and you'll have a very simple recipe to understand whether or not they are detrimental to your trading, whether you should just pump the brakes and wait for the next opportunity. And guys, all of this is just it's a byproduct of 3 rules. 3 rules is all it takes to enter the highest probability trend trade that Nexgen teaches. Each rule creates an advantage when true. Strong triggers, rule number 1, creates the advantage of momentum. And every time we talk about the advantage of momentum, we're talking about a market where the odds are favorable for it to continue in the direction of an already established trend. Rule number 2, no termination conditions, room to profit targets. We're going to call that a clear path. And when you have a clear path, there's no brick walls in the way to stop that momentum. And then finally, rule number 3 is going to be the advantage of an entry area. And that's that point where the market is most likely to continue, where the bounce is most likely to happen to continue with that momentum, with that clear path. So it only takes 3 rules to identify and enter the highest probability trend trade, and you only need 2 charts to do it. Simplicity is hands down the easiest way to get to where you want to be. Simplicity, the fewest moving parts, is how I teach this first hour. And on this large chart, the big chart, the slow chart, the first bar is going to define direction, momentum, and areas. Rule number 1, giving you the advantage of momentum through strong triggers, is met, and you'll know that it's met on the first bar. Making sure you have a clear path, nothing in the way. You'll know on the first bar, 1 bar, in this very broad stroke of the brush, guys, it shows the overall opinion of the market. It's a slower moving chart. It's a little more difficult to see change on this chart, which is okay, because the second chart is the small chart, and this is the refinement chart. And this is the one that will show the change that you can't see in that one big slow bar. And we use this entry chart to define entries, guys. It's a small chart. It refines that broad stroke of a brush. It shows the inner workings of this 1 bar. It shows pullbacks and continuations. And we use that refinement process to pinpoint the best of the best entry for these highest probability trend trades, guys. That's rule number 3. And rule number 3 only comes into play when rules 1 and 2 have been met on the large chart. And momentum and path. Once you can define these, once you can have a market that is moving quickly, that is moving in the direction of the trend, that has nothing in the way, that's your core. That's what opens the door for you to see the next level of trades. We use these 2 charts. It's just a metaphor, who you're trading with or against. I want you guys to think of the large chart as the big crowd, the men and women who can move the market, who create trends, who react at key areas. And these are the people that are typically in charge. And the large crowd typically wins. And your small chart, it's kind of a visual of a small crowd. These are still people with a lot of money and a lot of ability to create little ripples in the matrix, if you will. And they create what's called a retracement. There's a fight from the small crowd. The great thing is they lose their fight typically 70 to 80% of the time. Which means that when you're using this entry chart, the smaller, faster chart, what you're doing is you're pinpointing where their fight is most likely to fail, where that market is most likely to bounce and continue in the direction of everything that the large crowd wants. So it only takes 2 charts. It only takes 3 rules. And we're going to spend the next 30 or 40 minutes going through each of those rules individually. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. It is okay to trade when my rules are met because my rules describe a pattern. I'm such a big fan of patterns, guys. It's a look. It's a thing that happens, that repeats all the time. But it's been proven to win more than it loses, and that's how it made its way into the rules. You guys have the ability to simulate. You can practice. You can get in there and get reps. You can take pictures. You can break everything with zero consequence on a simulator. The only thing that's going to happen is you're going to get smarter every time you do it. And you'll get even smarter if you post your trades in the classroom. So every time you take a trade, you're going to go through and you're going to talk about 3 things on your chart. You're going to talk about momentum, path, and entry. And even if you're not brave enough to post in this room, guys, go through this anyway. Momentum, path, and entry, those are the three advantages. If you can point them out on your chart, you know you have a high probability trend trade. If you present your chart in the room and you discuss these 3 things, it gives me the opportunity to make sure that you're reading your indicators correctly. And if you're not, it gives me the opportunity to teach you how to read them correctly. If you made a mistake on entry, if you made a mistake on exits, if you misread, guys, we'll go through each and every picture. We'll talk about it. We'll make sure that we get you the right answers, the clarity that you need, and the ability to do just a little bit better next time. And you're going to go back and study these trades, guys. Every day you're going to go back and you're going to study and you're going to begin to learn and to trust your rules. So annotation is key. You're writing a roadmap for what it is you want to do that's bringing you success. And then we're going to simplify. The trade plan that I hand you at the end of this little lecture spot is called the KISS plan, the Keep It Simple Sunshine plan. And the KISS plan is designed to optimize your chances of success with the high probability trend trade. So my first hour is dedicated to teaching the absolute best of the best way to take this trade. Your job will be to know what looks you're going to commit to begin to recognize the pattern so that it becomes easy. And that's the second piece of getting to where you want to be ASAP. Use the spreadsheet that I give you every morning. Let me pull this over here. And what this spreadsheet is it's 4 tabs, and I'll drop it in the room right now. And the first tab is the Chart Reading 101. This is where you can go through and take pictures of individual trades or of individual advantages, so strong triggers. Start flooding this with pictures of strong triggers, what it looks like, what it means to you, annotated, why they're strong triggers. You can do it with weak triggers, clear path, terminations, and entries, guys. And this is just when the rules are met and when the rules are not met. When it's time to take a trade, when it's time to sit on your hands, and you're creating an understanding of the difference between the two. There is the client trades, and this is about, I think it's 400 or 500 pictures, I'm not even sure, in the green section of you guys using momentum, path, and entry. Great study guide for new users. Go through, click on these, begin to look at the patterns. And of course, if you ever have questions about the patterns, bring those to the room. There's the entry sequence for long and short, ideas on management. There's a place for you to build your plan with the pictures. When you see these patterns, when you take these pictures, when you drop them into this spreadsheet, what you're doing is you're creating a roadmap for your success. And then finally, the trade tracking sheet. And this is where you're going to drop your pictures in. You're going to throw those annotated pictures into the spreadsheet. You're going to, most importantly, talk about the feedback from class. Every trade I have something to say. Sometimes it's just, high five, this is perfect, this should go into your plan, oh my gosh, what a great way to do things. And sometimes the feedback is, hey, let me point out the challenge that you had with this one. Let me show you how your entry could have been a little less risk. Let me show you how your profits could have carried out to that further region. But the feedback is going to happen every day, and you're going to start to recognize patterns in yourself. When you're doing great things, You're going to be able to see it. You'll see the feedback, the annotation. You'll know to repeat that. And then when you're doing things that are creating challenges, you're going to see that and you're going to work towards correcting that. So with the spreadsheet, with that feedback section, guys, the best, most effective way to use it is to go back and study it. Don't just take a trade, take a picture, and forget about it. Wake up the next morning, dedicate 3 to 5 minutes, that's all it takes, and look at the previous day's trades and ask yourself, what worked? What do I want to do again today? What's bringing me success? And then maybe even more importantly, what didn't work? What's the feedback that's repeating itself? What's the pattern that's keeping me from reaching my goals? And you'll find that you're very relaxed and things feel easy when you're following rules, when you're believing in these advantages, and you will find that it feels forced when you're knowingly breaking your rules, and that's when people get fidgety. And this little historical study, guys, each morning is going to set you up for the day. It will accelerate the learning. There's no doubt in my mind. I say that with 100% conviction. The more pictures you take, guys, the more charts you annotate, the faster you're going to get to where you want to be, the quicker recognition is going to come. But it's important that you know what we're looking at. So we're going to go through the indicators real quick. It's only 2 slides long. What am I looking at every time I open up a chart, guys? I'm looking at triggers, small triggers and large triggers. Small triggers are the solid lines, large triggers are the dashed lines. They go up, they're green, they go down, they're red. We're going to use trigger lines to define momentum. We'll use trigger lines to define termination conditions. We'll use trigger lines to define entries, guys. They're going to show up in everything that you do, and the only thing that you need to know is that these are small and these are large. Both charts will also have areas, and areas are just Fibonacci indicators, and they have names, and they have different roles depending on the chart. On the large chart, these areas can stop the forward progress of the market. They're going to be areas where you're taking profits. On the small chart, these areas can define entries and create bounces to go with the trend. And you just need to know the names, guys. There's divergence highs, which is a magenta line, divergence lows, which is a cyan line. Every time you hear divergence, I want you to think loss of momentum. And that's all it does, is it visually lets you see that the momentum is not following price. You're going to see Fibonacci resistance, the red lines, Fibonacci support, the blue lines, yellow 1-to-1s, and then that mid band that runs through the middle, guys. And we're going to use these indicators, we're going to use these triggers and areas to enter the highest probability trend trade Nexgen teaches. And it all starts on the large chart, and it all begins with strong triggers because we're looking for the advantage of momentum. The only way you could ever have strong triggers is if you're trading with the trend. So define trend first. On the large chart, if the background is green behind the first bar, guess what? You're in an uptrend. If it's red, you're in a downtrend. How's that for easy? And it doesn't say jump in, the market's going up, or hurry up and sell, the market's going down. It says look for your rules to be met, to go with the trend, to follow the trend, to let the large crowd lead the way. And strong triggers, the only way you can have them in an uptrend is if both small and large are green. If the small triggers are up and above the large triggers are wide, and there is space created between the two. That gap between the triggers, it looks like scissors that are open. This gap is what it means to have strong triggers. And in a downtrend, same thing, background's red, small and large have to be red. Right here where the trigger lines don't match, you don't have strength. Right here where the trigger lines don't match, you don't have strength. Strength means that you have separation between the small and large, that there's a gap, that scissors are open. And the great thing is when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Strong triggers are what we look for to have the potential to break key areas. Strong triggers can cover a lot of mistakes that new users tend to make. And when I have these strong triggers on a large chart, guys, you're going to see these 1 bars. It's like they sprout a tail or a wick. You're going to be able to pinpoint right where these tails and wicks are most likely to form by using that refinement chart. So keep that in the back of your mind. This is going to be a study tool. Every time you have odds favorable momentum and you see a tail, get in the habit of circling it and seeing if it fit your pattern on the small, faster chart. And that's the whole lesson in strength, guys. Strength is separation, which means that if the small triggers work their way back inside of the large triggers, the strength is gone. And this is what we call weakness, guys. And when I have weakness, anything can happen up or down. Weakness is where big retracements typically happen. Weakness is where key Fibonacci areas are more likely to hold. And let it be very black and white. Let it either be strength or let it be weakness. And I'm going to open up crude oil, and you can see that strength pushes up and strength pushes down and strength pushes up, and there's even one of those tails, one of those potential entries. We'll take a look at that. Strength breaks an area, strength is breaking areas, and weakness is where these areas seem to be holding, where these retracements tend to come from. So could you give me a Y in the room if you're with me? Separation means strength, odds favorable, potential to continue. Weakness means anything can happen. Accept it as anything can happen because you never know. And once you have strong triggers, better dad. Man, I was wondering about you this morning. Good to see you back in here. Once you have momentum, you have to make sure that there's nothing in the way. So we're going to make sure that there's no termination conditions. We're going to make sure that we have room to profit targets, and we're just going to make sure that we have a clear path. And a clear path is good stuff. Hey, Cav. Termination conditions. What's a termination condition? For the lack of a better way to say it, it's going to be a horizontal line on your large chart. Sabbatical ended. Needed to go back to work. I'm assuming that's what that is. Maybe. Yeah, it happens. Better dad, we're going to be neighbors pretty soon. Guys, termination conditions. My wife just accepted a contract in Colfax, Washington, about an hour southeast of you. Horizontal lines on a large chart, guys. Horizontal lines on a large chart. This is where the large crowd is making decisions. These are the areas that could create a bounce. These are the areas that can create fights. It's not cold in the summertime, Jen. 6-month contracts. We'll be out of there before it gets bad. I do hate cold, though, and I love that you know that about me. I do. I like 100 degrees. All right, guys. Divergence highs, divergence lows, support, resistance, one-to-ones. All of these areas can stop forward progress of the market, no matter how strong the momentum is. And there's a simple recipe for defining them as a termination condition. And since these are where the large crowd are making decisions, we're going to let the large crowd get there. We're going to let dynamic Renko bars get to resistance. And once they get to resistance, we're done with price, actually. We're going to let the trigger lines tell us the story. So when price reaches resistance, I want you to ask yourself, where are my triggers? And if your triggers remain below resistance, resistance is a termination condition, guys, and it could reverse the market, and it could create a bounce that could pull you out of a position if you tried to go long. There could be a fight right at that area. And the reality is, and the truth of the matter is that you never know what the reaction's going to be. Hell, it could even break. In this case, it's a termination condition that reverses the market. That's what we call a strong top. But if price reaches a line, resistance, and the triggers remain below, just sit on your hands. Do nothing. Wait for the reaction rather than trading into an area that could stop the market. And then if the price is going down and it reaches Fibonacci support, all you're going to do is ask yourself, where are my triggers? And if the triggers remain above support, guys, that's a termination condition. Wait for the reaction. Don't try to predict the reaction. But rule number 2 says that if this is the case, price reaches, triggers don't break, just no trades into the area. Rule number 2 is not met. Your advantage isn't in place. This is your 90%. Very often they break, typically with momentum. And The difference between a termination, price reaches resistance right here, small and large remain below. And guys, this will be a termination condition. Every line you reach will be a termination condition, at least for a moment. It's considered broken when the small and large triggers get above the area of resistance, not when the price bars get above, not when the fib changes color, but when the small and the large triggers get above the area of resistance. That's when resistance begins to behave as support. That's when your path is clear, and your path will remain clear until you reach the next area. And then once you reach the next area of resistance, guys, it goes right back to number one. So for the brand new users, it should be very black and white. It should be either a termination condition, sit on your hands and pause, or it should be a clear path. And with momentum, go look for an entry. Let it be black and white, at least for a week or so as you go through it. And it opens the door for number two here. And number two is actually the second trade on the plan that I'm going to give you. And this is what we call a 50-50 trade. And 50-50 is a reference to where the trigger lines are. Because if no triggers through as a termination and both sets through as a clear path, 50% through, small triggers smash through the area, and 50% not, as long as there's momentum, guys, this fib has the potential to break. But it's only potential, and which means that it's not a clear path. And if it's not a clear path, it means that we are relying on momentum to carry us through this area. And that becomes very key as you go to take that second trade, making sure that the momentum is present. So price reaches, no triggers, no trade, relax, kick back, do nothing. You'll never know what the reaction is going to be. If the potential is there, know that it's only potential. Demand a lot of momentum and manage it assertively. And then once that path is clear, once small and large get below, support begins to act as resistance, guys. Your path is clear until you reach the next line. And we're going to go back to crude oil here, and we're going to take a pretty good look at this. Using the top fib. Price reaches Fibonacci resistance. I'm going to make this nice and big. And this is what it looks like in the moment. And none of the triggers are through, therefore, it's a termination condition. And that path is not clear until both small and large get above resistance. Resistance begins to behave as support. Does that make sense, everybody? Small triggers and large triggers get above resistance. Resistance behaves as support. And if you look at this, there's actually a little tail where it comes back and tests it. This is one of those instances where it had the potential to break, but it didn't. And sure enough, it pushes all the way down, and it had the potential to break, and it didn't, and it decided to go back up. And you're going to see that a lot, guys. You're going to see resistance behave as support. You're going to see Fibonacci stopping the market both directions, creating indecision. And you never have to get caught in consolidation again, guys. You never have to hope the market goes up or down. You can simply wait for the reaction, wait for the advantages to come into place, and then take your trade. And rule number two, guys, it is the king of the 90% rule, because there will be times where your areas are stacked and packed and layered. And guys, you won't be able to find a clear path. This is 90% of your day. It's okay to do nothing, guys. The futures markets trade billions every day. You don't have to be in every move. You don't need every tick, guys. You don't have to hope that it breaks. You don't have to try to predict what the reaction is going to be. If you can find a way to capture $400 trading from a fib to a fib with momentum, guys, $400 a day is a six-figure income. It's $100,000 a year based on 252 trading days a year. Rule number two is going to teach you patience. It's going to demand patience. Is everybody good? That's my rule number two lesson. When price reaches that area, wait for the reaction. That's what we call an untradeable bounce. It goes back up and another untradeable bounce and off of Fibonacci resistance again and again, over and over, guys. And where did that big move up start? Weak triggers right at blue Fibonacci. And where did that big move down? Weak triggers right at a divergence high. Pretty cool, right? You guys have the best advantage ever of knowing where highs and lows in the market may happen. And here we have the weakness, the retracement, and it's pulling right back to support that used to be resistance, guys. Rule number 2 is amazing. And it's found on the large chart. But there is one termination condition that is a small chart termination condition. And that is 3 divergences in the same price range. 3 divergences, 3 losses of momentum in the same price range can terminate a trend. It can create an untradeable bounce, guys. It could reverse the direction. But 3 divergences is the only termination condition that I will accept on a small chart. Other than that, terminations are defined on the large chart. And what this is the small chart giving you a little heads up that with all of this momentum, things might be changing. So if you see it, don't look for your entry. But if you have momentum because of strong triggers and your path is clear because there's no termination conditions, guys, we're going to go to the small chart, the fast chart. We're going to let the small crowd fight. And we're going to use a limit order to buy or sell their pullback that they create. And we're going to do it at an area, and we're going to do it with that area inside of triggers, guys. Because triggers define the retracement zone. Large triggers, price returns to large triggers. So on your entry chart, you have large and synthetic triggers, 5-1 large triggers, 13-2 large triggers. We put them both on the chart because you're going to use these to define where the retracement is most likely to occur. Guys, you can increase accuracy if you allow them to be one on top of the other. If you allow them to be favorable large triggers. You'll be able to take trades with this look, little less accuracy, little more risk. You'll love to take trades with this look because when those triggers are one on top of each other, guys, the retracement zone is in the exact same spot for both charts, and it increases the accuracy and it reduces the size of that window where the market is most likely to continue. So keep that in mind. We are going to use a limit order to buy or sell a pullback at an area inside of triggers, which means that first we're going to allow the rules to be met on the large chart. We're going to insist on momentum. We're going to make sure the path is clear, and your small chart is going to be screaming in the direction of the trend, screaming in the direction of that large chart momentum and clear path. And the first thing that I need is a reversal bar. I need the retracement to start. I need the fight to begin. This reversal bar, when everything says up, guys, I'm going to identify where the retracement is most likely to go. When this reversal bar prints, and honestly, with about 2 weeks of practice, you're going to start calling your shots long before the reversal bar prints. But this is the pattern, guys. First, you get a down bar, and you define where that retracement may go, where that fight may go. And the large triggers, the synthetic triggers, they define that retracement zone. So you've got a pretty big box here. From 15 all the way down to 99, about $160 zone where the market may retrace. The trigger lines are not your entry, guys. The trigger lines define where the retracement is most likely to go. We're going to look for areas inside of triggers. There's that phrase, areas inside of triggers. Fibs, mid-bands are yellow 1-to-1s. Let me say it one more time, inside of triggers. Guys, that $160 zone, that 16-tick range, turns into a 2-tick range. And from Fibonacci support, the highest area inside of triggers, to the mid-band, the lowest area inside of triggers, guys, this is where the market is most likely to bounce. This is where the small crowd is most likely to lose their fight. This is going to be your entry point, your window of opportunity for the highest probability trend trade you could ever take. And you're going to be able to pinpoint this while that reversal bar is still doing its thing. And you're going to activate a limit order. Remember, we're using a limit order to buy or sell a pullback at an area inside of triggers. And this limit order is the end of your realm of control. You're in control of whether or not the rules are met. That's it. That's the final stage you're in control of. And if they come back and get you, you're in a high probability trend trade. You are buying a pullback at an area inside of triggers. Pretty clever, right? And guys, you're not just in a long position. You have the advantage of a market where the odds are favorable for it to continue because of those strong triggers. You have the advantage of nothing in the way on the large chart to create a bounce, to create a problem against your highest probability trend trade entry. You have the advantage of having entered at the point where the market is most likely to bounce and continue in the direction of that trend. And guys, once you can define your entries, once you can pinpoint where the market is most likely to continue, once you accept that this is your highest chance of success, activating that limit order right at the top of the window, guys, it becomes effortless. You can't wait to do it. You're excited to do it. And by defining where the market is most likely to continue, what you've done is you learn to ignore the lines on the other side of those triggers, below the triggers, on the what I call the wrong side of the triggers. Because let's take a picture. Price is most likely to retrace down here to the bottom of the triggers. Is everybody good with that? That's where the retracement's most likely to go. But that's not your trade. Price is most likely to either bounce off of that mid band or off of these 1-to-1s. You're not sure which one it's going to be. It's a window, but because of the large chart advantages, your entry comes at the top of that window. And because you know where it could retrace, because you know where it's most likely to bounce, you're training your brain to not want to be in trades on the wrong side of the triggers. The wrong side of the triggers is where your advantage is gone. It's gone through everything good designed to stop it and make it bounce. Reversal bar says let's figure out where the retracement is going. Areas inside of that retracement zone are where it's most likely to bounce. Anything beyond the triggers, guys, anything beyond the triggers is where your advantage is gone. So by learning to pinpoint where the market is most likely to continue, you are defining where the market should not go. And this is where your initial stops are placed, where the market should not go. Generally 4 to 5 ticks above all the trigger lines. This is going to be in the plan that I gave you. This is the first step in the management plan. Managing risk before you manage profit. If the market gets beyond those triggers, guys, your advantage is gone. Rule number 3 is no longer in play. So we're going to study this pattern. Guys, that's it. That's the rules. I wish there was more to it, right? Because a lot of you are like, Mark, how on earth are 3 rules going to be enough? Well, if you can say to yourself, I don't have momentum, it's not my trade, you avoid that loser, guys. If you can say to yourself, I don't have a clear path, that's not my trade, you can avoid a loser. But when you have momentum and you have path, let's see what that circle looks like. Boom, boom, boom. Wow. Sorry, wrong one. This is how we're going to study. If I can get my other chart up. There we go. Every time you see momentum and path, you're going to circle a tail, guys. Whoops. And squish your charts. And I want you to see what happened. With this look, it pulls directly back to the mid-band in the retracement zone. And it dances a lot, creating indecision and fear. But I only get 2 divergences, so I don't have a termination. My advantages are still in place. It never goes below the trigger lines where the market shouldn't go, and all that momentum just carries the market up. And guys, all of this dancing on the small chart is inside of 1 bar, and I want you to see this. This is your refinement process. If I put that square around 1 bar, you are seeing from retracement to continuation and all of this dancing. But what I really want you guys to get is your advantages never went away. Your advantages never went away on the large chart, guys. This is nothing more than a refinement chart. So the pattern is as follows. Momentum leads the way, strong triggers, odds favorable. Smalls and large are above resistance. Resistance is now behaving as support. Wait for the reversal bar. Let's do this. Wait for the reversal bar. There it is. At the time of the reversal bar, whoops, define where the retracement is most likely to go from the smalls to the large. Does everybody see it? That's where it's most likely to retrace. I don't know where in there it's going to go, but it's most likely to bounce from the highest point of support to the lowest point of support inside of triggers. And guys, if I take this trade, I know without question exactly where my stop has to go. Is everybody with me? New users, how you feeling? We do the same thing every day. This is your pattern. Large chart leads the way. Momentum is strong. Everything says up. And we're defining. We're defining where the market is most likely to continue. And you're going to be able to activate a limit order just above that area. And if the market comes down, uh-oh, that mid band went up. Let me go up a tick. If the market comes down and reaches your entry, guys, you're there. You're in the highest probability trend trade ever. Does everybody see how the large chart during that whole retracement doesn't blink? And even though the market dances in that range, it never gets below the triggers.
Order canceled.
And if you circle the tail, it's at the low. That's your pattern, guys. That's your high probability trend trade. There's an easy way to learn it. Repetition is key. I can't stress that enough. So I'm going to give you guys this. This is Chart Reading 101. And it's on the wrong screen, so I'll bring it to the right screen. This is Chart Reading 101. This is just you taking pictures of strong triggers and annotating. This is you taking pictures of weak triggers, annotating why they're weak triggers, what that means to you. You taking pictures of a clear path, you taking pictures of termination conditions. And I'm going to show you guys, this was sent to me. Strong triggers, weak triggers, terminations, clear path. Guys, this was sent to me by somebody that went through this drill. And what they've done is they've created recognition of exactly what it means to have their rules met. And they've created recognition of exactly what it means to not have the rules met. And go back every morning, guys. Put these pictures into your spreadsheet. I've given you the basic rules section. Study them for a couple minutes each morning. Make sure that you know what it looks like so that you can focus on following your rules. I'm also giving you the high probability trend trade checklist. This is the best of the best, guys. Is the market coming from a strong top or bottom? Is it a termination that reverses the market? If it is, it's not even a rule. It just adds warm fuzzies. The highest probability trend trades happen after these. Termination that reverses the market. Do you have momentum? If you don't, guess what? You don't have a trade. If you have weakness, it's okay to sit on your hands. Are you trading into a termination condition? I hope not. Is it only the potential to break? Well, gotta make sure that's not a high probability scenario. It's only a high probability scenario with a clear path. Define your entries, guys. It's going to show you where the market shouldn't go. And then the second page is the high probability trend trade checklist. And this is just your entry checklist. These are the rules you should be writing on every trade that you take. And guys, nobody's ever used this spreadsheet truthfully and done worse than 70%. I have an enormous amount of faith in this checklist. And if you can harness your emotions, if you can work that patience piece, guys, and follow the best of the best, nobody's ever done worse than 70%. Think about that. The goal is to win. And the easiest way to do that is to have a solid plan. To have something that is regimented, that is repeatable, that is testable, that is provable, that is proven to win more than it loses, guys, and then to adhere to that plan, to do the same boring thing every day all the way to the bank. So this is the KISS plan. And the KISS plan is a stepping stone in your learning journey, guys. This is the one that teaches you to read your indicators. This is the one that optimizes your chances of success. And this is the one that teaches you to see the other trades that are available. And then through simulation, through study, through class feedback, continuous practice, guys, You can create your own plan if you want to. You don't have to stick to the plan that I give you. But until you're in a position through chart reading to build your own plan, guys, this is proven. This is time tested. I've had people trade this plan, get in the 80% win rate, get funded in those prop firms, and find a career in trading, never having to look for more. Um, but our egos are huge, and we start to believe we're infallible and we want every move. And just we're looking for the best moves, guys. There's two things that you need to know before you sit down and you're not in the simulator. And that's you have to know why to enter a trade. And the easy answer is because my rules are met. Because my rules describe a pattern. That pattern has been proven to win more than it loses. And if you go through the process of proving that it wins more than loses, guys, if you go through the process of circling tails on your large chart when the rules are met, right? If you go through the process of defining your entries, of testing your entries, of looking at these entries, eventually you believe, you trust, you know that this is the best of the best look that you could ever take. And what happens is you kind of refuse to enter the market when the advantages aren't present. That's the goal. But you also refuse to not enter the market if the advantages are present, because you know you've proven you're going to win more than you lose. And that allows the rules to help remove emotion. Because if you know that you have the potential to win 70 to 80%, it also means that you know and accept that 20 to 30% of the time you're not going to find the success that you're hoping for. And that's normal. It's a positive part of an equity curve, guys. It is, it's a cost of doing business. So entries are what we focus on for like 35 minutes. How to get in at the right spot. And then you have to know why you're going to exit. And this is the second half of what we do, guys. And this is the part that most people kind of get the heebie-jeebies on, because now you've got something to lose. Exits are taken because advantages go away. That's why you exit a trade. So if you enter the market where it's most likely to continue, if you've got that great entry, your exit comes when the advantages are gone. Maybe the market gets 4 to 5 ticks beyond the trigger lines. Maybe you get 3 divergences in the same price range. But you can define your exits. You can define your entries, guys, and that's what the plan does. So first, it defines your entry, the best of the best, following rules, giving yourself the highest chance of success. And then the KISS plan gives you a way to manage it. And your management in the KISS plan is super mechanical, guys. It's if-then. It's designed to help remove the adrenaline and the emotion. And the KISS management plan is designed to help you understand and trust stop placement, as well as being focused on getting paid. And it's funny that I have to keep you guys focused on getting paid, because most of you, most traders, want all of the money. Most traders want everything, regardless of what the market says. And most traders will hold trades way longer than they need to. Most traders will put entirely too much risk on a trade when there just isn't any reason to do that. So we're going to get you focused on stop placement and getting paid. And we're going to use 2 contracts to do it. The first one is going to put money in your pocket. Ron just said it. Base hits pay bills. The second one is going to get you to trust the large chart advantages and learn how to hold for bigger moves if you decide you want to. So your KISS plan, guys, and you'll create your own based on your experience reading the indicators. Your KISS plan begins with entering 2 ticks below resistance inside of favorable large triggers, 2 ticks above support. And if this is your entry, then your initial stop is 4 to 5 ticks beyond the triggers. That's where the market shouldn't go. That's where the advantage of rule number 3 is no longer in place. And you will know your risk before you ever enter a trade. If I enter at 71.34, my stop is at 71.49. That's $150 per contract. I have to accept that. If I try to beat the system and put my stop in the retracement zone, it's likely to get hit even though the market continues down. If I try to put it below areas, try to save a few pennies, guys, I trip over those pennies and I lose all the dollars. So You're going to know where it's at. Learn to accept it. And with a little bit of study, accepting it becomes easy. And your targets are predefined in the KISS plan, $100 and $200. So if I enter where the market is most likely to continue, then my stop goes where the market shouldn't. And there's nothing for me to do at this point. That's it. I've taken my great entry. I've put my stop in the right spot. They're either going to stop me out, cost of doing business, or they're going to give me that magical reversal bar in the direction of my trade. And I'm going to redefine where the market shouldn't go when this bar prints. And my new stop will be 2 ticks above that reversal bar. Because this bar, this reversal bar, is confirming that the market is going down with all that momentum. It's confirming that it's going down with a clear path. And it's confirming that it's going down from the area where it was most likely to go down. Guys, at this point, I'm going to minimize risk. And that $150 per contract turns into $30 per contract. And this reduction of risk doesn't guarantee a winner. This confirmation bar doesn't guarantee a winner. But it means that if things go south in this trade, if it becomes a loser, I'm only giving up $30 per contract. And I'm telling you, that feels pretty good. So once again, I'm going to sit on my hands and I'm going to do nothing. It's either going to stop me out, it's going to happen every now and then, or it's going to go to my first target. My first target is only $100 away from that great entry. And once I reach it, goes $100 worth of funds goes into my account. I'm a winner now. And that win is making me feel successful. And that success is creating the confidence that I need to repeat this process over and over. And with money in the bank, guys, you're going to go break even. 0 risk on the trade. And 0 risk on the trade, break even, for some of you may not feel like the best stop placement because you're still at an area inside of favorable large triggers and the market's still going down with all the advantages, guys. But this break even, it reminds you that you wouldn't have even thought about taking this trade if it weren't for this look, if it weren't for momentum, if it weren't for the clear path. And that second contract, that break even stop, this is developing trust in the large chart and the large chart advantages, understanding that momentum and path are the basis of everything good that we do with this software, it seems. So if they don't get you break even, it means that all that momentum and path worked. And it goes down to your second profit target, which is only $200 away from your amazing entry, which means that over the course of about 3 minutes, you're $300 better for your efforts. And that's not a $300 day. Guys, that's a $300 moment. That's a fraction of the trading day producing results. But if you hang it up right there, you're like, you know what? Whew, $300 sure feels good. If that's the best you do every day, guys, that's a $75,000 a year. And this is the part of trading that I don't believe traders understand, is that your account doesn't know if it's a $300 trade, if it's 3 $100 trades, hell, if it's 6 $50 trades. The only thing your account knows is that it has $300 in it, right? So it doesn't matter how you get there, and I'm going to repeat what Ron said one more time. Base hits pay bills. It's consistent profits, guys. Consistent profits, day in and day out. Having the highest advantages, being willing to get paid, be willing to exit when your advantages are gone. And if you find a way to consistently make $100 every day, your brain is going to tell you that it's boring, that it's not enough, that you can't do it. A trade copier, do that $100 on 10 accounts, guys. That's a $1,000 day based on one $100 trade being mirrored on 10 accounts, and that's $250,000 a year. Find consistency, and that's exactly what we're trying to instill is consistency, consistent profits. So your high probability trend trade, guys, this is your path to consistency. It's going to teach you to read your indicators. The management's going to teach you to understand where the market shouldn't go, to learn how to get paid. And that high probability trend trade is going to open the door for the second trade, the 50-50 trade. So our entire morning has been focused on learning rules, guys. That's it. When is it okay to trade? It's okay to trade when the rules are met. You have the ability to simulate, to practice, to get reps. You have the ability to post these trades in the room to get feedback on everything that you do and everything that you see. And my job is to teach you to read indicators. My job isn't to grade your trades, to tell you if it was right or wrong, which is why I need you to tell me why you did what you did. Why did you trade from a mid band directly into a zone, directly into fibs with weak triggers? What created this? Why did you trade directly into a fib? Right? So this is an educational room. I don't see momentum, I don't see clear path, and I don't see any entry rules. And Gary, great job getting paid, but there's nothing I can tell you. There's nothing I can do for you here. But if you tell me, well, John didn't do it either, right? John, why? Why did you go short? To the new user, this means nothing, guys. To the new user, this is zones at 1-to-1s is a great short target. Awesome. Cool. But how do I get in, right? How do I get into the trade? Why did you get into the trade? What inspired you to get into the trade? Guys, every time you post in the room, give me the whys. Your whys are what make it repeatable. Your whys are what sets you up. I know why John Novak took that short. Every indicator on his chart was aiming down. He got in a mid-band. It's a different process that we're not talking about. He knows the whys. He has a plan. He's following rules. Guys, if you're going to post in this room, talk about the momentum, talk about the path, talk about the entry. Tell me what you did, because you're not just telling me, you're telling you why you did what you did. You're setting yourself up for long-term success. You now have a plan. You have a spreadsheet. You have a place to study. You know how to study. You know what to study. You've got chart reading 101, guys. You've got high probability trend trade checklist. You've got a KISS plan. I'm dropping the zip file, everything you need. It even includes the PowerPoint that I use to teach each and every day. Your job now is to get the reps, to get the seat time, to get the time on the pond. And then once again, John's given a lesson on termination conditions. You don't have to trade into a zone, guys. You don't have to trade into a fib. You can see it. You know it's there. You know it could stop the market. Take your profits. Get out. Wait for the next best. Thank you for that, John Novak. And guys, this is TradingView. These zones are just fibs. Look how they hold. It's the exact same concept. And once you accept that you don't have to be in every move, that you don't have to hold for the entire day, that's when trading gets easy. So we learned the rules. You guys are going to post in the room for feedback. We kept it simple. And guys, you have market replay. You can go back and replay a day. You can practice over and over. You can pull up your checklist. Make sure that you're following rules. You can take pictures of everything. The more pictures you take, the quicker you're going to get to where you want to be. I'm going to show you my picture count for 2025. We're at 5 months. I'm at 2,800, guys. 2,800 pictures in 5 months. There's a reason the chart reads become good. Look at all of them. They're annotated. I'm building a plan for me. I'm building a plan for you. And guys, just repeat the process every day until you're taking the correct trades. And if you're always taking the correct trades, guys, if you're taking a trade that's been proven to win more than it loses, if you're checking your emotions, your ego at the door, it means that you're guaranteeing yourself that you can win. And that's when you come to this prop firm. That's when you test your plan to see how you do in a live scenario. And guys, that's when you trade live money. So that's my first hour each and every day. And it revolves around momentum, path, and entry, guys. Momentum, path, and entry. And we're going to work our way into the second hour now. And the second hour is the feedback section of class, guys. This is where you're going to get input on everything that you do. But I've got to remind you, this is my little disclaimer as we go into the second hour, guys. Everything we do is about advantages, building a foundation, taking that foundation, taking those advantages, compounding a little bit, becoming a little bit better every day until you're consistent. Guys, the chart reads will take you no time to get good at. The ability to do nothing is the part that's gonna take the most time. You new users, I'm blanketing you with very conservative rules. focusing on advantage recognition. I'm handing you a solid, boring plan that optimizes your chances of success as you learn to read your indicators. So, for all you new users, it's going to feel like not having momentum in a trade is horrible, and trading into a termination condition is just don't do it. And anything beyond the triggers is death. And guys, that's how it feels. And these blanket rules are there because it increases the likelihood of success. And success is what breeds confidence. And these blanket rules, believe it or not, are solid rules and a proven plan, and a plan that's been proven to win more than it loses. And even though they're a little vanilla and boring, and even though you have to be patient, guys, this is a plan that's been proven by Nexgen users to bring profits and success. These things aren't always bad, but until you have repetition, until you've got the time in there, until you can read your indicators, guys, it's just safer that way. And then you grow. You have time with the software and you begin to see more. And this opens doors for you guys. So if you learn the process that yields results, if you know the patterns that are proven to be successful, and that's what you focus on, the results seem to follow. And that's where the KISS plan comes in, guys. If you keep it that basic, if you follow simple rules, if you're okay with a couple trades instead of having to be in every trade, you can find an extraordinary level of success. And I've seen it for decades with Nexgen, and I've seen it in the last 5 years I've been teaching this. And the further you deviate from simple, the longer it tends to take to be comfortable with the recognition. So question everything. Don't ever sit on a question, guys. Don't ever wonder, hey, what was that? What is this? How do I do that? Drop it in the room. The only way I can help you is if I know you need help. So be vocal. But give yourself a little grace. New users, you are brand new. This is your freshman year of college if you're new to Nexgen. And all of us that went beyond college and into our careers and got really good at what we did, we don't remember the struggle in the beginning. We don't remember English 101 in a freshman year. We just know where we're at. And guys, you're on your way to getting to where you want to be. So I'm going to take 5 minutes. When I come back, we're going to start looking at charts. Remember, guys, do me a favor. If you post a chart in my room, you're saying, hey, Mark, this is what I saw. And if you're not telling me what you saw, guys, what are you asking me for, right? Describe your momentum. Talk about your path. Show me your entry. Show me your exit. And the magic of what Nexgen does with this education room, guys, is telling you what you did right or wrong, helping you understand the read of the indicators, giving you tips and tricks to do it better, to reduce risk, to maximize profit potential. So please do me that honor. I will be back in 5 minutes, guys. I'll leave you with crude oil. It's a weak top that came right to support, and support held. And those large triggers, price returned to them. And now they're trying to go up. Pretty cool, right? And you guys knew not to go short. Nicely done. I will be back in 5, guys. Post them if you got them. All right, y'all. Here we go. Second hour. Don't have momentum. The smalls are on the wrong side of the large. Does everybody see it? And price reached a divergence high, and none of the triggers have broken through. And this is a pause moment. This is a sit on my hands moment. I'm going to wait and see, guys. If this is going to break, it's going to get above it. And if it's going to roll, these triggers are going to roll. And I don't have to predict. I don't have to wait or hope that it does something. I can just sit on my hands and be calm. So I'm going to scroll up to the top of the room. There's not a lot of pictures in here today, guys. So I'm hoping for some good conversations. Scrolling up. That was yesterday. Joel got us going, doing a little chart reading. Smalls are still outside, but the momentum is going away a little bit. Awesome clear path. Perfect entry. And the only thing I could say about this trade, Joel, is maybe your stop was a little bigger than it needed to be. Bottom of the triggers were right here at your entry. Could have been a 4 or 5 tick stop. Pretty reasonable where the market shouldn't go. Great looking trades. Sometimes they don't work. That's it. Sometimes they just don't work. Andy, we've got 2 from you. We'll take a look. Andy, I was wondering if you would do me a favor. Are you in here? Just for grins, man. Will you show me what strong triggers look like on your large chart? Because you've got an extra set of triggers and I'm not completely sure which ones are the largest. But it looks like you have momentum and you say potential to break not quite 50-50. Which means termination condition, right? Termination condition is, if it's not quite 50-50, it's a textbook termination condition. And then you get divergence at a termination condition and you get in and it works and you manage it beautifully because you know of the trouble. And this is kind of the cool thing, guys. When you start talking in terms of advantages, when you begin looking at your charts and saying, I have this, I don't have that, it lets you know when you need to be a little more assertive. It lets you know when you need to be a little more aggressive. Andy knew that it wasn't perfect, so he managed it aggressively, and it was nice. So, Andy, you're struggling with that too because Z built those. The 14-2 and the next larger one practically ride each other. But I'm curious, you have three. If you want to right click, man, I don't want to tell you. Okay, so this is the 55-8. So this is your large chart large and your large chart small right here. Is that right? So this one I'm not even looking at. This is a 55-8. Who cares? That's your large chart triggers. So there's no separation. It's interesting that your small triggers are as big as your large triggers. That's what throws me off. There's no separation at all. And there's no separation for the entirety, which leads me to believe that something's weird with your settings, dude. You've got 2 large triggers. Look how they mirror one another. You're not getting any separation. Because it looks like you have 2 large triggers. Do me a favor, right click and go to your indicators. And under, let's see, Pro Trader. Let me double check real quick. Maybe it's synth new. Mid bands. All right, I'm not sure. You may want to go to Jason and just ask him. just ask Jason and go, Jason, my small and large are riding each other the whole time. I never get separation to show momentum. Can you fix it? And Jason will say, hell yeah, I can fix it. But I think that if you're relying on momentum to take these trades, let's make sure these are right. And I was looking at your charts and I was scrolling back this morning through previous charts, and it's difficult to define momentum on your charts. It's easy over here. Over here you have the separation between small and large, but here it just looks like two different looks on the large. So nice trade though. Great management. Sorry to digress there. Guys, sometimes I'll see your charts and I'll say something doesn't look right. Let's figure it out. And then Andy, again, no separation, so it's difficult. You definitely have a clear path. And down here, you're like, not really a 50-50, but it worked. And so what you had is a market that's cranking up and cranking up with momentum. 3 divergence says Andy, pump the brakes. Don't take it. It's not the best look. And look what happens. It pushes low enough to take you out of a trade. But then all of your triggers roll, and it gives you that little momentum style look, and that's just a continuation entry. And then when it comes up and you're up here, there's your entry. It doesn't work. And I think that being able to gauge momentum is going to do wonders for you. I think that understanding that momentum indicator is going to help a lot. And it's a good looking entry and it just doesn't work. I feel like you're missing an advantage there. And then check it out. Off it goes from a strong bottom. Might have been fading triggers there. Yeah, so you might not have had the momentum that you were hoping for. Against a 55.8 for sure. And look what it did. It pulls right back to those 55.8 triggers. As price does, right? So it's a huge gap. I don't want to mess with the trading that you got in the AL class. But ladies and gentlemen, this is for everybody, not just Andy. You should be able to know what you're looking at on a chart, and you should know how they affect your trades. So when I look at a chart, I want to see small and large triggers. I want to see them clearly, and I want to be able to define momentum using them. And when I've got a small chart or a large chart, I want to be able to see my areas clearly. If you had a gazillion dollars, you could risk that trade. But one of the great things, Andy, is we don't trade based on the gazillion dollars. We trade based on accuracy, right? We trade based on precision. And that's one of the reasons that Nexgen software allows you to reduce risk so dramatically, is because we've got very clear ideas of where the market could turn and very clear ideas of where it's most likely to bounce. And we use these indicators to create that precision. And the more you change the role of the indicators, you have to kind of redefine a little bit. Because now this isn't a Nexgen look for momentum, it's got to be Andy's look for momentum. And Andy, I don't know how you define it. That's why I was asking, show me what strong triggers look like to you. And I don't know that you have the ability to do that with your large chart. Either way, great continuation entry right here. And then that one just didn't work. It went right back to the large triggers. Good stuff. And guys, I do this sometimes. I'll see your charts and I'm like, hey, something looks weird. Let me see if I can help. Then Joel, odds favorable, clear path, open like scissors, right back to resistance inside of triggers. You get paid, out break even. Picture perfect, Joel. Picture perfect. Everything we talk about every morning, and you executed it beautifully. All right, Pete. Make sure I read everything. Technically, this is not a strong top as both smalls got through. That's true. The triggers rolled. Great separation. Odds favorable. Clear path. So one thing, Pete, and everybody in the room, we're about 3 ticks shy of resistance. So technically price didn't reach. And this area never broke. And look how your small chart gave 3 divergences to let you know that's probably the end of the road. And sure enough, it was. And once those large triggers roll, they kind of confirm, hey, Pete, check it out. The smalls get back below, the large are rolling, and Pete says, I'm going to take a shot. And then he gets paid quick because he knows it's not perfect yet. And then when everything really starts to open up, he says, now I'm going to go. And absolutely beautiful. Not sure about that stop, Pete. Not sure about that 2-tick grab. That's the perfect look to ride it down. And then when everything is screaming, you find a way again. That's the only one that seems suspect. I'm not sure why you exited there. It was finally going in the direction of all the good stuff. Nice trade, Pete. Or nice trades. And then everything is down. Momentum, potential to break. Perfect entry. Joel, I think that's the same one you took. He gets paid and gets off. Absolutely gorgeous trading. Nicely done. And Pete, Joel, I think yours was high probability. That fib wasn't there. Pete had the same look, just a little different, but still the same. Nicely done, both of you. And for my newer users, I want you to feel comfortable if you have a question. So Aaron or Bejoy, Nosebleed, Todd, guys, Better Dad, if you have a question about something that you see going on somebody else's charts, please, please, please feel free to ask in the room. I'll answer any of them to the best of my ability. And let's see, Miss Jen, I bet I know what this is. Odds favorable, potential to break, no divergence, perfect entry, and then you accidentally added one. You get paid, divergence prints, and you take an exit. Got messy here. That's okay. 120 with your error. That's okay. I take 120 every time. I would take 120 every time. Perfect entry, Jen. I mean, absolutely beautiful entry. Miss Jen, yes, I had an amazing birthday. Thank you. I snuck in 9 holes of golf in between the thunderstorms. My wife was like, go play golf. It's your birthday. I'm like, it's thunder and lightning. But right in between the cells, it was pretty good. And then we're doing dinner with my boys tonight. They're coming over. I'm going to grill some steaks, have some fun. I love your trade. And yeah, I've done the accident, and you're like, but beautiful. And here's what's cool, and this is what I want new users to really take note of. I want you to see her entry at 58.38. Is that the one? No, 44. 58.44 is Jen's correct entry. 58.43 is where Pete got it. 58.43 is where Joel got it. Different parts of the world, different mentalities, different zip codes, different computers, but the exact same entry, guys. 1 tick difference. And if there was one thing I could say that illustrates why it's so important to learn the process, this is it. Everyone found success with this trade. Everyone took the exact same trade. It wasn't their emotions, it wasn't their hopes, their wishes, their wants. It was simply following a set of rules that have been proven to win more than they lose. And it's that consistency. Yeah, I noticed. Jen, you didn't have a fib. You did. You had the fib. You had the same fib Pete had. right there. 46, 46. Oh, the divergence. Pete did have divergence. You didn't have divergence. Joel didn't have the divergence either. And that can just be like one tick. That can be like one tick's difference. That could be different data. And yeah, just trade your charts. No, it's no worries. Sometimes John and I'll have that as well. We're like, he opens an hour before I do, and it's like this little magical moment where you get a half a tick discrepancy, and it can do that. This is Ron. This is the king of the chili dog, guys. This is a gentleman that has built a living on base hits, pay bills. And this is the gentleman, thank you, Ron, that gave you guys this trade. So many of you are finding success with this look. And it's based on momentum and nothing in the way. And with momentum and nothing in the way on both charts, it's pretty easy to grab $110. And that's the basis of that plan, is when I have momentum, when the path is clear, I'll find a way. I'll find a way to make money. I'll find a way to get paid. And all this is momentum and nothing to create a bounce, guys. $110. Base hits, pay bills. Do that 4 times a day. It's a 6-figure income. And there's a lot of people in this room finding a lot of success with that trade. It's called the chili dog because it gives you enough money for a chili dog later in the afternoon. Ron, great look. And one of the things that Ron will tell you in this room, and Ron's been with us a long time, is the high probability trend trade may not be your get rich trade, but it's the one that teaches you to see your get rich trade. It's the one that teaches you to recognize that there's more opportunities in the market other than just that high probability trend trade. Strong, large chart. Ron, your chili dogs are expensive. You make tons or you eat many. I'm going with he probably eats many. Strong chart, strong, large, wide separation. And Pete, you say it's right into the term, but it didn't quite get there. No divergence, pulls back to areas, inside of triggers, doesn't get below. This is a pretty good looking trade. And I think this is the one that we circled earlier, and you're seeing that dance. You're seeing that dance. Lost sound. Can you guys hear me? Give me a Y if you can hear me, please. Major 8, I like it. Beach calling, have fun. Good to see you in here. Man, it is storms for the next 3 days here. We're trying to fill the lakes back up. Great job, Pete. Just good recognition. Being willing to sit on your hands if it doesn't feel like it's perfect. That's hard to do sometimes. It's hard to be willing to sit still. Nicely done. Thank you, everybody, for the Ys. All right, Miss Jen. Odds favorable momentum. Potential to break. And you take it not on the way down, but rather on the way up, which I love. And you're out of trouble. That's a great looking trade, Jen. You allowed it to fail and then caught it after the failure. I like the way you took this. It's an interesting look. And it's just a next-gen momentum trade. Beautifully done. Don't see all those from you. Don't see a lot of those from you, but you did it really well. And then Pete, strong trending market, smalls riding the large. So guys, this is a look. 30 bars in the same direction, no reversal bars. You'll see those small triggers begin to ride along the large. It's just a strong trending market. Odds favorable momentum is assumed. Pete jumps in, loses the momentum on the small chart, doesn't work, jumps back in, works out. So, Pete, one of the things you have to ask yourself is, do I want to take momentum style trades without momentum? Because they tend to do this. That's a harder look. It's a good look. I like letting it get back above that divergence high, but you're killing it this morning. Nicely done. Guys, I'm almost to the end of my pictures. Gary, we saw yours. John Novak, we saw yours. There we go, guys. We made it to the end. That was quick. So what's the market doing? I've got momentum. I have a clear path, but I don't have areas. I don't have areas inside of triggers. Some people, if a reversal bar prints, will take that and say, and let me show you how this works. We're going to do two things here. If it takes momentum, path, and entry, I'm going to show you how speaking in terms of advantages works out. I have momentum, I have path, and I don't have entry, right? So instantly I know it's not high probability. I need something to get me into this market because I can't define an entry. I'm already on the wrong side of triggers. One of the things users will use is a reversal bar, a confirmation bar. And let me show you why. And it doesn't guarantee a winner because you're on the wrong side of the triggers, guys. But what it does is it says, okay, my entry's not perfect. Come on, snag it. My initial stop where the market shouldn't go is right here, right where I'm hoping for an entry. So if I wait for a confirmation bar, if I wait for a reversal bar off that area, I've got some place to put my stop, going back to that very basic KISS plan. So some people will say when the large chart's perfect, I'll wait for a confirmation bar because it establishes my risk. And then my hope is that momentum and path continues in the direction of the trend. Does that make sense, guys? It's a great little trick, and it's one of the variations a lot of you will create as you grow with the software a little bit. You'll say, okay, I see momentum, I see path, I don't have an entry, which means that I can't define my risk. A reversal bar allows me to do that, guys. And getting in with a reversal bar with this look on the large is paying dividends right in front of you. Confirmation bars. When the large chart is great, guys. A reversal bar from the middle of nowhere without rules met, that's not a confirmation bar. That's just a reversal bar. You took that one, Pete? Because the large chart is perfect, right? Why wouldn't you? And this is why when you get in the habit of reading your large chart, let me open this up. I want you guys to see this. My large chart says up strong with nothing in the way. Stands to reason the market is more likely to go up. So the large chart advantages, guys, starting on the large chart, gauging the advantages, saying, wow, this is something that's about to go. On the small chart, you're just saying, dang it, it's not perfect. Let me look for a way to capitalize on that large chart info. And that's all you're saying. And you could jump in arbitrarily at the mid-band and then it could just run you right over, right? So waiting for that confirmation bar pays dividends. And there's a lot of acreage above you. We'll see where it goes. And Bob, you made a quick 150. Nice. Hard to go wrong. 220, 280, sorry, old eyes. Great job. So you'll find a way, guys. And here's the deal. This is not the KISS plan, right? Entering in an area outside of the triggers is not a part of the KISS plan. So you build an addendum. You change your plan, guys. Your plans are living documents. And in the very beginning, the KISS plan, that simplicity, that's what does it for you. This is my entry. Dun, 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 dun. And then your plan changes a little bit. And this becomes part of the rules. These are my rules. Here's my addendum. As long as the other rules are met, this is what I can do to find the trade. And it doesn't mean that the KISS plan is bad or that it needs modifying. It means that you're going to begin to see opportunities where modifications pay dividends, guys. And that's what you get when you start to read the indicators. But here's the challenge. The challenge is if you continually modify in the moment, modify on the fly. Oh my gosh, I'm so afraid it's going to go without me. I'm going to change my entry to entering at the triggers. Oh my gosh, I'm so scared that the market, will XYZ. I'm going to change my plan in the moment. Those are the changes that create challenges, guys. Those are the changes that take the repetition, the predictability. Those are the changes that pull the consistency out of the equation. So doing the same thing every day, and then when you see something, when you begin to recognize a pattern, that's when you start to change your plan. That's when you start to modify your plan. That's when your plan begins to grow. And large chart, every bit of it said we were going up, right? And I'm not sure why anybody entered. Nothing changed. You guys remember when we said that the reason we take an exit is because profit targets are hit or something changes? If you entered on this reversal bar, I'm guessing a lot of you guys said, oh no, one divergence, right? Oh no, there's my exit. Guys, this never changed. This only got better. The small triggers rolled and went up. It only got better. The large triggers, the synthetic triggers, the areas, the momentum, the separation got bigger. Everything on this trade continually improved. Don't let a little pink line scare you out of the perfect trade, guys. Does that make sense? Is anyone still holding? Anyone still going, yes, here we go. Momentum and path. I love momentum and path. That's hard to do as a new user. And some of you have predetermined targets. And some of you have trailing stops. Totally cool. But do you see how nothing changed except for the better? Nothing changed except for the better. You hit a pink line. You didn't get divergence. Hell, you didn't even get a reversal bar. And the large chart never changed. The large chart is still screaming up with absolutely nothing in the way. Couldn't we say this is a high probability look? And the only thing on the small chart to pull me out of a high probability look is 3 divergences in the same price range. Welcome to management, guys. Management is where you have to have a reason. If you exited at a pink line, that was your opinion, that could take your money back. I don't see any loss of advantage yet. Kind of cool. You got to see these things. You have to talk through these things. You've got to recognize these things, and you got to work your way through. But let me go to the other side of it. If you made $150, that's awesome. If you made $280, that's awesome. If you made $200, that's awesome. And this is your management picture. So if you exited, this is the picture you need to take. And annotate it. When I exited at the divergence high, nothing had changed against my trade. My trade was steadily getting better. The small triggers supported it. I can hold. And that's it. And all you're doing, guys, is you're working on your management plan. All you're doing is you're working on your management plan, and you're going back and you're saying, okay, this is what I did. Here's how I could do it better. You take your picture, you open your spreadsheet, and you start working on that management plan. You start working on that next level. Maybe you call this picture, nothing changed, don't exit, right? And there's your management plan starting to grow. There's that next level. And I think that if you start talking about the only reason I'll exit a trade is because my advantage is gone, it's still not gone in this trade. This trade is still doing everything that you could hope for. Hailstorm, Joel. We've got some strong storms where we're at, but I don't think we've had any hail yet. I hope not. My car's out front. Good lesson there on management, I think. Weak triggers, right? Odds favorable momentum, but into a termination. Welcome to your holding pattern, ladies and gentlemen. You can start playing if then. If my small triggers break through, this fib has the potential to break. Until that happens, absolutely no short trades. And then even then, if my small triggers break through, it's a 50-50 from a weak top. It may not fit your rules if you're trading the KISS plan. What do you want to talk about, guys? Whoa, that's my untitled workspace. Sorry. Excuse me. Your crude trade's still going up. How important are the pink and yellow 1-to-1s on a small chart when you have a clear path and momentum on the large chart? And that's because when I have a clear path and momentum on a large chart, small chart flies through those. So PJ, great question. And I'm going to answer it with a picture. And I think you'll like this answer because this picture reminds you to keep it simple. Your large chart is going to define the direction of the market. Your large chart is going to define the momentum of the market. Your large chart is going to define the areas, the termination conditions on the large market. When this chart says go, the only thing on a small chart that we consider a termination condition is 3 divergences. 3 divergences in the same price range. Does that make sense? And then John Novak added in there, if John Novak gets divergence from a 1-to-1 on the small chart, he'll exit a trade for the moment and then re-enter with confirmation. And I'm going to try and find an example of that. So if John Novak gets, or not ever re-enter, go away, John. And I can't find an example of it. Your plan will change as you grow. So PJ, your most basic approach is that if this chart has momentum and path, the only thing that's going to keep you out is 3 divergences. As you grow with the software, as you begin to recognize different conditions, guys, there's all sorts of things that can happen. And I'm going to show you, I've got a document called Exit Conditions. And I'll share this with you. Initially, if you're in a high probability trend trade, it's the KISS rules that get you out, guys. And you're focused on the KISS rules, that adherence. And then as you grow, a second lower divergence that you can look for entry. Divergence from a 1-to-1 can be a deal breaker, can create a big, ugly, retraceable bounce. Large chart areas. So that goes back to PJ, very often they fly right through them, right? So unless you get divergence from it, you're not even worried about it. Unless you see that divergence from it, you're not worried about it. And then guys, we have the same thing. Odds favorable, clear path, no areas inside of favorable large triggers. Rule number 3 is not met. You guys used a confirmation bar down here. You have to make the decision if that's what you want to do again. Remember, this room is the basic room. It's I'm giving you the best of the best. That solid foundation. And then John Novak just came in. He said, yeah, but there's so much more once you can read your indicators. There's so much more opportunity to manage. There's so much more opportunity to potentially take an entry. Would this be a 50-50? How do you define 50-50, Joel? What is it referencing? 50-50 is talking about your trigger lines. Small triggers and large triggers, right? So this is a great picture because what it's doing is, do you see how the bottom line of the large triggers haven't cleared the area yet? So absolutely, Joel, this is still 50-50. And I always think of trigger lines are like a car. If the front of the car and the back of the car get through the line, well, then the area is broken, right? It's gotten through. If the back of the car doesn't make it through, if the back of that trigger line doesn't make it through, that's it. So 50-50. Well, divergence, and then Joel, it's not an area inside of triggers either, is it? So it's potential to break, loss of momentum, wrong side of triggers. On your chart, there's a myriad of things that are starting to be counter to the trend, that are becoming detrimental to the trend or to the trade. And then Joel had a big fib here. So Joel, you had that fib coming through, and I'm not sure why. Does anyone else have that fib? I'm missing it. It's a small chart. Nope. It's a 13.2 fib. Joel, have you done a clean out lately? So nobody else has it. Joel must be in cahoots with John Novak. And you have done the clean out. I'm going to rerun my... I'm just going to make sure. How many days back are you, Joel? Are you 10 days back, or did you shorten it because of volatile markets? That could have something to do with it. The time zone you're in could have something to do with it. But the cool thing is you don't have an area inside of triggers. All right, so let's show you the other side of this. I love this. Large chart rules are met. Guys, this is one of the greatest lessons. Odds favorable momentum, clear path, best of the best, solid. Rule 3 is not met. Can you guys give me a Y if you see that? Rule 3 not met. No areas inside triggers. You could arbitrarily buy the midband and hope, right? But if you waited for confirmation, you had a place to put your stop. If you arbitrarily bought the midband and hope, you just got run over. And because it doesn't give you that confirmation bar, because it didn't give you that reversal bar from the area, look at the loser you just avoided. So this is kind of great going second level on that. When the large chart's perfect, but the small chart isn't, it's okay to insist on confirmation. And if you don't get that confirmation, guys, you don't take the trade against it. I don't know why you would take a short, Pete, but congratulations, it's working out. Does that make sense, everybody? You can choose to use confirmation, and when you take that path, oh, you changed it to 10 days. There we go. So it was the day count that did it. And now there's just nothing to do. It's momentum against the trade. No more longs. The trend is down. The momentum is down. The path is clear down. Shoot. Maybe.
Order submitted.
You look for an entry at the area at the lowest point of the triggers. Does that make sense, everybody? You're just going through. It's a flow chart. Each and every time. Do I have momentum? If I do, then I look for a clear path. And if I have a clear path, I'll look for an entry. In the same way a flow chart, take a picture. If I have this, well then I flow to the next one. And if I have this, whoops, wrong one. If I have this, I flow to the next one. And at any point, if I can't flow to the next one, I have to be willing to hit that stop sign. I have to be willing to say, okay, I'm a brand new user. This isn't my trade. I'm focused on the best of the best, the highest chance of success. I'm willing to sit on my hands and do nothing. And then that grows into the ability to modify your plan a little bit through your chart reading. And that's one of the things that we say all day long, is that through simulation, through study, through class feedback, through continuous practice, you'll be empowered to create a plan based on your ability reading the indicators. And that's a big part of what we do, is laying that foundation, giving you the best of the best, handing you a solid plan, proven to win more than it loses. And sometimes the CEO of the company comes in and does a bunch of confusing shit. Because all you need to know is that area is not inside of triggers. And if you never get a confirmation bar, who cares? Right? Or you're such a good chart reader that you say, I've got these little insignificant one-to-one swings and divergence prints from way beyond them. And then when it gets below it, it may never go up again, right? Or it might go up again. You'll never know. All you're doing is gauging advantages. That's it. You're just gauging advantages. How do I use those advantages to my favor? And that's all we're doing. And John, that's a rough one. Because I think rules not met for this room is a better version. No areas inside of triggers is a better version. Instead of trying to give significance to small swing one-to-ones on a 5-1 chart. Does that make sense, everybody? And I'm certainly not bucking the master here, because he taught me how to read indicators. And he's at a level that most of us won't be at. And he'll see things that even I won't see. Yeah, but this isn't NASDAQ. This is crude oil, right? And pink one-to-ones on the NASDAQ are more powerful because it's a higher time frame, because those small swings are actually big swings because the time frames are different. So great, and I know John did this on purpose. What I do on crude oil may not be what I do on NASDAQ, and what I do on NASDAQ may not be the way I trade the S&P, guys. Because when I change those time frames, the impact of the indicators is different. Does everybody see odds favorable, clear path, pull back to the lowest point of resistance inside of triggers, and down it goes? Anybody in that trend trade short? Beautiful, Bob. It followed the rules, didn't it? It fit the plan. And Bob, what changed to get you out of that trade? What's the advantage that went away? Profit target hit. Take it all day, every day. Profit target hit all day, every day. So between the 150 on the other one and the 350 on this, on the 200 on this one, that's 350, right? Beautiful. Man, until I get a close on the other side of these triggers, though, that bad boy's going down. Watch this.
Order filled.
Until I get a close on the wrong side of those triggers, this trade's going down. So if you're one of those people that wants to hold a runner, I've got momentum, there's nothing in the way. A reversal bar on the wrong side of the triggers, that'll signify a loss of momentum. We did this experiment once to see how long it went down. And it was like $800. It was funny. I don't know if it'll do it this time. But we're going to chase the reversal bar marker. For you guys that are looking to hold, this is one way you can do it. You're like, okay, I've made my profits. I'm break even. I've got a third contract. Maybe I'll hold it until I hit an area or until I get a reversal bar on the wrong side of the triggers. Because as long as they are on the left side, it's going up. Does that make sense? This would be one of Ron's chili dogs. Odds favorable. Nothing in the way. Nothing in the way. Odds favorable. We're going to see if momentum and path win here. And then we're going to take a break. And when we come back, guys, if you have a question, ask it. John Novak's going to do a little seminar for you. So you guys with questions on TradingView, John's going to take over the microphone, I suppose. It's nothing big or planned, but Josh had a lot of questions about entries. How do I get in? How do I do my stops? How do I do my targets? So John's going to take the camera and do all that, guys, and this is going to be a great opportunity for you guys to ask any questions that you have, for you to get the clarity that you need. I'm going to go through the same PowerPoint I went through yesterday, reminding you that there's nothing new. There's nothing that is foreign. It's just kind of repackaged. It's the same thing Nexgen's been teaching for 30 years. And then he'll take over at 11:20. That's perfect. And yes, extraterrestrials are real, John. E.T. Gonna phone home. Yeah. So I want to see what this does. I'm just messing with you. Yeah, got a little cloud fog this morning. Oh, we got a down bar so we can move our stop. Drop risk by a tick. Saw one on the flicker box last night. Bob, does this make sense on potentially holding the final contract? It still hasn't closed above, and I don't know. We'll just see what it does. And it may. I don't know. But I think this has been one of the greatest lessons I got. And John taught me this probably a year ago. And I don't know why he held out as long as he did. But as long as you're left, it's going down. It's just the way the indicators work. And it's that reversal bar that's the loss of momentum. And it's cool because it keeps you from getting caught up in these little fluctuations. Keeps you from getting caught up in the fluctuations. So I'll tell you what. We don't need that anymore. We'll just come back and look and see what it does. I'm going to take just a couple minutes. I'm going to walk away. When I come back, we're going to go through the TradingView basics, guys. We're going to go through the workspaces. We're going to take a look at the indicators that are going to be on those workspaces, and you're going to realize that it's really nothing new. It's not anything outside of your comfort zone. It's just a different way to package it. So I'll be back in about 3 minutes, and then when I come back, little TradingView 101. If you have questions about the Nexgen indicators on NinjaTrader, please post them in the room. It doesn't mean that the room's over. It just means that we're going on to something a little different. I'll see you guys in just a couple minutes.